A Hollywood legend joins me now to talk gold and other metals. We're at the IPMI conference here in Arizona. Wayne Rogers, thank you so much for being with me.
Thank you, Daniela. I'm not sure I'm a Hollywood legend yet, but it's kind of you.
So, Wayne, I wouldn't expect to see you here at a metals conference since you're an actor, obviously. How did you get interested in commodities?
Well, I'm interested in the whole area of finance, and I started years ago when I first went to Hollywood. I made a little money. In those days, Westerns were popular, and I made a little money, and I had heard all these stories about people who had business managers who lost their money. Duke Wayne, for example, who went broke at one time. Burt Reynolds, for God's sake, who was the leading actor in the world for 5 years in a row, and Burt filed for bankruptcy and people like that. So, and generally because they had bad business managers, and I decided that if I was going to lose my money, I wanted to be the author of my own demise.
Wayne, how did you learn to pick the winners? Is that something you can learn?
It's something you can learn, but I don't know that you're not going to be 100% right. Nobody is. You just have to be right for more money than you are wrong. And I think it's a question of study. Yeah, sure, it is. I mean, today it's much more complicated because of rapid trading, electronic trading, and the world has shrunk. There was a time when I remember they would mark blackboards with chalk to talk about the bid and ask in certain things. Oh my gosh, that's primitive by today's standards. I mean, it changes in a second.
So let's talk commodities now, Wayne.
Okay.
You're liking them then. You like gold, you like silver right now?
Yes, I like gold, I like silver. I like even better some of the, it's gotten blown out of proportion, but productive real estate, for example, is a commodity. People think, anything that is subject to an inflationary pressure, and of course, gold and silver are recognized all over the world as interchangeable commodities. I mean, I can talk gold to somebody that I don't know somewhere in China or India or wherever it may be in the world, and there's an international understanding of the liquidity of gold and silver and the precious metals.
Okay, it's interesting you're speaking about inflation after the recent Fed meeting where they said we were perhaps headed, or people were suggesting that we were headed towards more of a deflationary environment. So,
well, let me tell you that somebody asked me about that, said, how can you say that there's pent-up inflation when, well, I'm saying that there's going to be inflation, monetary inflation. You're not going to see it, however, until we cure the unemployment, When employment gets, we still have unemployment above 7%. You get that down to 5% or less than 5%, you're going to see runaway inflation.
But in the last FOMC, they painted a rosier picture of the U.S. economy. What do you think of the U.S. economy right now? Are you optimistic? Are you bullish?
No, I'm not so rosy. There are segments of it where the economy is going to do very well. There's segments that are not. We have a terrible thing that's going on in this country in which the government is inserting itself everywhere into every business, so that the individual freedom and the ability of private business to rectify certain things. There's so many regulations now about certain. Just in the Dodd-Frank Act alone, I mean, it's unbelievable the number of regulations, and that constrains private initiatives.
Wayne, what would you heal first if you were Fed chairman? Where would you pay attention?
If I were Fed chairman, I would try to make my case to the Congress that you got to do something fiscally. Don't rely on the Fed to constantly try to correct this. Okay. You cannot do that. And the hit that we take now may be a lot less than the hit we're going to take later.
Right. So do you feel that there's too much involvement from central banks these days? Too much pressure that they need to resolve the problems?
Wait, you got to understand something. We had in something called the GlassSteagall Act that ran from 1933 to 1999. The Congress, in its infinite stupidity, canceled the Glass-Steagall Act. That's what led to the recession that we have. We now have the too big to fail. We now have 4 banks that control over 60% of the banking assets in this country. That's outrageous. They threw away the antitrust laws. They've allowed the banks to assume this. But there's no way you can control that. And that's because of the federal government and its stupidity has allowed this to happen.
But do you think Bernanke and the Fed have done the best they can do?
Well, I don't. The best they can do, I don't know, because everybody's always talking about, well, the Congress doesn't do anything. These people don't do anything. Better that they don't do anything. Better that they leave it alone. Let the free market make these decisions. The government interferes and has no idea what they're doing. You've got buffoons running it. I mean, you got here's the Attorney General of the United States. He's the highest legal officer in the United States, boldly lying to the Congress. I mean, these are people who are second-rate minds who are running the government, and they're getting more and more intrusive. It's crazy.
Wayne, would you like to see a return to the gold standard?
I'm not that smart. I don't know. I don't know that the gold standard is the way to do it. I think not. I think I prefer what it is, but gold can still gold has a gold and silver, all precious metals still have a value that people are going to say, hey, I got this piece of paper here that's $1 or whatever it might be. This thing, for example, let me just pull out one. All right, here's a $20 bill. Okay, what does it say on here? It says Federal Reserve Note. It only has value because we think it has value. Now, that's true of gold and silver too, but gold and silver can be used for something. This can't be used for anything. This only works if he believes or you believe and everybody believes in this, that this has some value. So I don't know that the gold standard changed that. I'd rather keep that out of it and let paper money, as it were. I mean, we do that in another way too. Stocks and bonds are paper. They represent something. They're not the real thing. You're talking about commodities. If I have certain commodities that are the real thing, if I buy grain or if I buy, bananas, I buy oranges or whatever the hell that is, I got something real that's useful, that somebody is going to, not because they think it is, but because it is. It goes to use. It goes for some practical purpose.
Wayne, you speak so passionately. Final thoughts for investors and viewers watching.
Be careful. I worry mostly about where the federal government is taking us. I mean, we have elected these people. If you read the Constitution was written by men who came from who were concerned about the divine right of kings. It was written to protect the public, to protect us from our own government, not to be a proactive government. Our government has gotten enormous and proactive, and it interferes in all of our lives, and that's the thing that concerns me most.
Wayne, it was an absolute pleasure. Thank you so much for speaking with me today.
Thank you. I appreciate it.
And thanks for watching our coverage from the IPMI conference here in Phoenix, Arizona. We'll have more for you throughout the day. In the meantime, you can email us at newsfeedback@kitco.com or follow this conversation at Daniela Cambone. Thanks for watching.